Morning. Well,
Good
the
morning,
NSC seeing some pressure being exerted from Nigerian breweries specifically. Some would say hardly unexpected that we saw profit taking come to the fore after the hefty price rise we saw to 91 naira 43 last week.
Well, for Nigerian breweries, we saw Nigerian breweries rally last week on the back of the announcement of Heineken acquiring about 5 breweries in the Nigerian space. As a result of that, we saw the share price of Nigerian breweries advance about 15%. In fact, it closed the maximum 5% up following the announcement over 3 trading sessions. So we expect to see profit taking this week, and that's why we've seen the stock traded down on Monday, and it also traded down yesterday. But our view on Nigerian breweries at Chapel Hill is that the stock is a buy, and we, even without the announcement of Heineken on the acquisition of breweries, we still see Nigerian breweries as a strong buy for 2011.
Well, that's just some of the activity that influenced movement yesterday. When it comes to broader news that's set to, one would expect, influence activity today, the NSC has suspended 60 stockbroking firms for non-compliance with that 70 million naira minimum capital requirement. What have you made of that news, and how do you anticipate it affecting market activity today?
Okay, if you recall, in 2007, a lot of the stockbroking firms took proprietary position in the market, and when we saw the market decline, we saw them erode their shareholders' equity as a result of having to meet interest payments. We saw the immediate impact on the market yesterday. We saw traded volumes almost half to about 300 million units, compared to the average we've seen over for this year to date of in excess of 500 million units. We expect to still see low trading volumes today, and we don't think the SEC is going to go back on its decision. 70 million naira, you may want to argue that for a brokerage firm which basically just does transactions on behalf of clients, it's not too much capital to post for the business. So I don't see traded volumes dramatically increasing to the levels we've seen so far yet to date. But slowly and gradually, they may begin to inch up as the brokerage firms comply with the minimum capital requirements.
In the meantime, how are you playing the markets today? Any specific stocks that you've got your eye on?
So far, we're seeing investors take profit generally. The banking sector has rallied strong year to date. The banking sector has done gains in excess of 12%. So we expect to still see mild profit taking, especially amongst banking stocks. Based on that, we expect the market to probably trade sideways for the rest of the week. But overall, we anticipate an uptrend for the market in 2011.
When I was chatting to you earlier, you had highlighted that, if anything, one of the sectors you'd be steering clear from this, for now at least, is the insurance sector. Run us through that, because we know, for one, a big problem for insurance players on the continent as a whole has been their lack of concentration on the core business, and that being the business of insurance itself.
Yeah, as you rightly said, Alishia, in 2007, we saw a boom in the sector because most of the insurance players, instead of growing their core business income, which is their gross premium, they were actually growing investment income. So we saw share prices react positively to that. The insurance sector in 2007 was probably one of the strongest performers. But when the market took a dip in 2008, we saw most of those insurance players post losses. The insurance sector was the worst performing sector in 2009 and also in 2010. In fact, we have most of the insurance players trading at their par value, which is 50 kobo. Some want to argue that, okay, it can't go down from here, it can only go up. But our view for 2011, we don't really expect much from the sector in 2011. Considering, even though the regulatory environment is positive for the sector, there are a lot of reforms concerning the retention of business in Nigeria, but we feel that the insurance players, most of them, don't have the required capacity, to underwrite most of these businesses, and therefore we'll still continue to see a lot of businesses leave the shore to the much more established and capitalized insurance players in the West.